are going too quick, please feel free to, flag me or have MJ flagged while I'm talking so we can go through stuff. MJ, I know you and I talked about a little bit about the DOJ. There's a couple of these I'm going to have you definitely jump in on. I know you've got a little bit more information than I do currently. So let me share the screen here.
Just before you run off on that,
Shoot.
what I was talking about is the settlement is pending and very close now, probably early in the beginning of the year, between the Department of Justice and the National Association of Realtors. There are significant changes to our industry that are coming, and we are all over them. I haven't even had a chance to tell Tommy this morning that I've already reached out to the speaker. In fact, I may bump you next week, Tommy. I don't know just yet, but they're going to come on and really tell us what it's going to look like. Basically, cooperating broker compensation is probably going away come March. And this means that there will be new forms for the buyer, and the buyer will have to build into the contract to ask for the seller to pay. Lenders are going to have to get on board for when the buyer's paying it. It is going to be an epic shift. And we're going to keep you right on the top of it. I almost didn't go into it because it has significance, and we don't want to mislead you or frighten you. So I'm going to leave it there, and we'll get the proper speaker, and Sam will take us back to, but we will keep you informed on the DOJ settlement as it happens.
Well, in some of the forms I'm going to go over, you definitely can see the foreshadowing and what's coming. Some of it we just don't have all the details, but again, as Mary Jane said, we'll keep explaining more and more as we get more information. But I don't want anybody to be surprised when I start explaining these. So, let's talk about December's new forms. Currently, they are supposed to drop on December 19th. They'll be in CAR. Thank you always, as usual, thank you as always for having me. Here's a little bit about me. I actually love this stuff way more than should be allowed. I've been doing this for almost 20 years. I am a CAR certified forms trainer, wind form, zip forms trainer. I'm now a trust probate certified and getting short sale certified again. I just like letters after my name, and I have no life, so that's where we come from. So let's start with what we were just talking about. They have completely changed the buyer broker representation documentation because of what is upcoming. So the BRE, the BNE, the BNN, all the different ones of executive or exclusive, non-exclusive, they're all going away. They will be gone as of December. We're going to have one form moving forward from everything from now on, and there will be no discussion of the compensation in this new form. All it's going to do is outline the different bits and pieces of this is our relationship, this is how we're working together, this is who might pay me, you might need to pay me here, but it's not specific to the compensation because there are additional documents that will clarify that. This is going to completely change how the buyer's agents are representing and going in for commissions. This is going to completely change some of how the entire sales process goes. There's a lot of documents that we're now going to need to be doing that are it's going to feel like a PED flashback of things that we have to do every single time for every single offer. Same as anytime they go near a house, they're going to need to do these disclosures and document which properties they showed at what commission point and everything along those lines. This new form is going to default to non-exclusive, meaning the broker is only entitled to payment if the buyer purchases the property with them. You can make it exclusive. This is going to be something that each broker is going to need to explain to their agents and what they want to do and to make policy. So I'm going to kind of glaze over this real quick. There's going to be much more, and we will need to have an individual class on how things are going to be moving forward once we get more information. Same thing here, it will create an exclusive agreement. Either side can cancel anytime. And it also explains that if the seller does pay the commission, that is created as a credit towards what the buyer is agreeing to, agreeing to pay the buyer's agent. So it's kind of going through saying, look, you're not going to get to double dip. If the seller pays you a commission, I'm not paying you the commission I said plus the other one. We're now just going to pay the full amount, like say 3%. If the seller side's offering 2.5, then the buyer side is only responsible for the 0.5 difference. It's going to get messy. And it's going to be something where we're going to have to get this cleaned up and documented, and the CDAs are going to be different, and there may have to be something even as they're going to show the property. So it's just be aware. This part's the messiest part, I think, of what I've got to talk about today.
And then for those who are not comfortable using a buyer broker agreement, who aren't comfortable talking about it, you're going to need to be.
You just have to. There's no, you don't have an option anymore.
Yep. And cars specifically, part of the reason we had to do this was because we cannot have buyer's agents any longer saying, I'm free to you. The buyer's agents were never free. That was misleading. And so it had to go.
Pretty much. That's the summary of it. And again, that's why we have the section 4 down here saying, so this will be about the seller to pay buyer broker. That's a form that you'll see when we get to the RPA. And then obligates the broker to disclose to the buyer the compensation the broker expects to get. So first you got to say, okay, I want to get 3%. And then you got to disclose, well, I only got 2.5%. So now you've got to give me the other half. This is going to change the entire presentation, how they do for offers. It's going to change marketing plans. It's going to change a lot. In addition, this now will go with it. So it'll be almost like when you're about to write an offer, you're going to have the buyer broker, then you have the BTA, which is the transactional advisory. And this is outlining, saying what the buyer needs to do, as well as it's limiting the agent's duties and limitations. So it's making sure, kind of like on the agent's visual in the front, pretty much outlining, clarifying, this is what we're responsible for, because there's going to be a back and forth of, well, I'm paying for you, so you need to do XYZ, and we're all service-oriented individuals, and we're all going to need to make sure, especially with some of our newer, hungrier agents, with the market doing its ebb and flow as it's doing, stay in their lane. This is a potential. This is to outline what they are supposed to do and what they do as agents. And we all want to service our clients, but we've got to make sure this is a reminder, going above and beyond, and some of that bullying that can happen, we need to be aware of. Then you have this form that will go with it, the ABCD. I think they've been waiting forever to get to use that acronym. So this is the anticipated broker compensation disclosure. So it's a 3-part form. The first, we let them know the seller's payment of compensation may impact the price the seller is willing to accept. They may want more money because they're paying these commissions, and that needs to be disclosed to the buyer. Then we have to go through this section. So every time they show a property and then make an offer, this has got to go on this chart. And it's got to go through and let them know how much and where was the source of the money and what's the percentage, or is it part of the price? Then lastly, whatever property gets accepted that they go into escrow on, that has to be disclosed of what was the final commission, what was the final compensation. But this is the grid that this is going to be the most reminder, like the PEDS. Every time you make an offer, it's got to be documented. And you've got to have the buyer initial each time. This form also has the buyer initial at the bottom. It's not required, but it's just to prove that they did receive all the information. This is going to be probably one of the hardest things to get everybody to remember to do. I don't think we're writing as many multiple offers, so I'm partially glad the market's shifted a little bit to make it easier to do this, but it's going to be a bit of a challenge. So then we also, that's switching all that part. So that's just dealing with the buyer, going over it real quick. Be ready, like Mary Jane said, we'll do another class. Now we're rolling into some of the new forms. This is about making a non-contingent offer. In addition to the market condition advisory, which already contains the majority of this verbiage, this is epically making it very clear of the risks of what type of offer you should be doing. It should be cash. You should already review all the disclosures before you make a non-contingent offer. It's stating you need to have this assessed by legal, an attorney, or someone along those lines, including your financial advisor. It's really reiterating how big a risk it is to when you're doing non-contingent offers. As we know, per civil code, certain things cannot be waived, certain disclosures can't be waived, those timeframes, the NHD, lead, TDS, all of that stuff. But for these type of offers, it's just going through and making sure that the buyers truly understand. Granted, I think the timing probably is a little later than we could have used this about 6 months, a year ago, but it's now out and it's in circulation. So this one will be starting in December. The counter offers are all getting updated. It's going to clarify that the seller's credits in the offer remain unchanged, even if the offer price changes. That's been a debate, obviously, so that's come up. And the difference between the offer price and the appraisal contingency amount will remain the same, even if the purchase price changes. So if it's in the offer and that's what's been agreed to, that's what sticks. It doesn't automatically update unless you update it on the counter offer specifically. when you make the change in the prices. Let's see. Okay. Wrong way. Too many buttons. Residential lease after sale. I don't know if anybody else has run into this, but trying to educate my clients has been a little challenging. In California, you can only charge twice what the deposit is. Well, or what the monthly payment is as your security deposit. Well, if you've got a seller renting back at no cost, there's no number, there's nothing there. We can't do a deposit because you have no base rent. This is clarifying that it's finally being put into writing into the residential lease after sale, the maximum amount of security deposit, because I don't know if anybody else has had some of the buyers now have been asking for like a $10,000 holdback when they're only paying $2,500 to stay in the property. And that's not technically what should be happening. This finally puts it into the document explaining to everybody that this is the amount you can charge instead of trying to go back and explain California tenant laws. It also goes back and says, look, we've already disclosed to you the condition of the property in the contract. You know what the condition of the property is. Granted, if something happens, a pipe bursts, something falls apart during the leaseback, we do need to disclose that. That needs to be dealt with. But overall, this is the state of the property. This is what the state of the property was. And if there's any smoking damage currently already in the property, that is what it is. The seller does not have to fix that before they leave as the tenant. Extension of time is becoming an amendment, not an addendum. There was a big thing about that. A lot of things are getting changed to amendments versus addendum because amendment is the changing where addendum is the addition to. The extension of time amendment now will have a time frame to respond by. So it's not just floating out there. We put out an ETA, they haven't responded. This is going to become like the AEA counteroffer and everything else. You've got a time frame to get back and then it just expires. It's no longer in play and we have to start over. Same thing's going to happen on the cancellation of contract. When you select mutual cancellation, because that happens so often, but when you try to push through mutual cancellation, then you now will have a time frame to respond. If you don't respond within the time frame, then the cancellation disappears and then you have to start over again. Manufactured purchase agreement addendum. This is basically they're incorporating the MHA verbiage and letting everybody know the contractual requirements for the condition of the mobile manufactured home to be occupied. There's certain things when you're dealing with manufactured homes, if they have the 433A, I'm going to say it wrong, that it's become actual real property versus personal property and what state the unit needs to be in for it to be able to be sold. The MHTDS is a little bit, they've cleaned it up a bit. It's much closer to the TDS itself, and it really was just a formatting change. So the contract. Here's some of the big things, just the verbiage changes that have happened in the contract. We're now using the verbiage, it's and approve. So before it's been acknowledge or receipt or they've delivered, but they actually have to approve. Well, what does that mean? What if a buyer doesn't like what's on an AVID? What if a buyer doesn't approve of how a seller filled out a disclosure? I don't know. But I do know that this is going to open a doorway to potential litigation issues. So we're going to need to be aware and really want to take a look at what is being completed on the disclosures and make sure it's as clear as possible. And anything that looks where there could be question, you may want to circle back with your listing agent and seller and get supporting documentation whenever possible from a third party. That would be if you have any water leaks, the insurance claims, reports, those type of things. I mean, as always, verify with everything with the broker of record and what they would like to require, but I do feel that this is going to open up some opportunity if there's potential litigation after close. So it's something to be aware of. Buyer investigations now specifically are to include availability and cost of the homeowner flood, fire, and homeowner flood and fire insurance. I don't know if anybody else has run into this over the summer, but I had several properties where we almost did not close because the cost of the fire insurance was so exorbitant. And just finding out the number of it, because it's not something that needs to be disclosed, it's research on the buyer's side. They have to make sure they know all these numbers before they remove that contingency.
Sam, many escrow companies, including ours, have discontinued ordering ordering a certificate of insurance for the evidence of insurance, not the actual application, but the evidence, and requiring the lender to do it because there's no reason for all of us to take the sticker shock anger that the client is going to have on as an obligation when that obligation belongs to the lender to explain to them why they need to be insured at a certain level and get it ordered the way they want it, and all that. So escrow has been stepping out on that, and you should be looking for your lenders if you get a request for help with fire insurance.
That 100% makes sense. The contingency time frames to include 5 days after delivery, whichever is later. This has been on multiple parts of the CR, but now it's on every single one. It's clarifying that, look, yes, it may say that you've got 7 days to look at this, but if I got it to you at day 6, well, they're now going to go till day 11 because they get 5 more days. Every single one, you get 5 days to review. It's within the time frame, whatever's longer. So multiple times I know I've run into situations where, well, we have to get the things out or we have to do this in the contract. Well, you only have 7 days. Correct. But there also is there's a sub part that everybody gets 5 days to review. So make sure you're looking that over. You might want to go through that with some of your agents when you're getting files. You may want to double check all the time frames. Reminder of delivery if you don't have the disclosures done with the listing. This is also could be something that could be a flag and a problem.
I'm going to throw in a shameless plug here. This is why our pre-escrow program has been so successful. We will open the escrow at the time of the listing. I will teach you how to get the defensible space. We will get your PR. We will collect your seller's data safely through electronic measure, DocuSign, and other safety programs that will allow us to collect that stuff. And if there's a lien or a judgment or solar, especially these days, solars are just off the chart as being a pain in the neck. And now I'm having multiple solars on one property or the other. Please do try the no charge ever, no cancellation fee pre-escrow. We use all your favorite providers and we will set your escrow up so that your HOA docs come out day 3. Your demands are already ordered. Your SI is already cleared, all those things. All that time is just gone to waste if you wait till escrow actually opens. So
well, now that we're in a longer typical listing period and you can get sellers that tend to become disengaged because of the length of time, having all of that done up front while they're still engaged, while they're still motivated is key, because when it gets to the longer and longer the escrows they're waiting to get involved, they kind of go, I'm done. Are we done yet? And so go ahead.
It helps your agent as well, because when it creates interaction that they don't have to do, okay, and it also kind of binds it. There's no obligation because there's no real escrow. We have to walk away if it has to go somewhere else, and there's never a cost. This is purely speculative on escrow's part, but it has been so successful that this is my whole year next year. It's going to be preaching the pre-escrow, but I'm sorry, I lost my train of thought, but you definitely want to use, I was gonna say that it binds them, that they feel like they're already in escrow. They feel like they've already done some work. If the agent is having stress with them, sometimes this helps that half the work is done. It makes it harder for them to walk away.
They're more invested.
Yes.
It's an investment. It already feels like an investment in having to start over and not wanting to redo stuff. So it's definitely something you want to look into doing. Remembering that tests are part of the inspection reports, certificates, and everything else. So if they had a perk test, if they had some sort of plumbing test, if they had, somebody had to do an EMF for the electrical to see what the test was, to see what the ratings were because of the location of the wires. Anything like that, that's still a disclosure that still needs to be passed on. Seller to provide known insurance claims within past 5 years. We all know that. What if you get a probate? What if you've got a trust sale? What if you've got an REO? What if, those are going to come back up? Well, the buyer can give permission on the ARC, which is authorization to communicate. And that way they can directly contact the insurer to find out if there are any claims on the property. So that's another thing, which, again, a lot of this has already been known. It's just clarifying it in writing. So we don't have to go back scrambling trying to find the supporting documents. Okay, let's get into the contract. So one of the big things, no default amount for the points. So the buyer needs to clarify how many points. And I don't know if anybody else has noticed this, because we've been out of practice since, when rates were below 4, nobody cared. But with rates climbing at the rate that they have, make sure you're educating your newer agents who have not been in this type of market. They need to be filling this out. You need to be putting in the interest rate caps. You need to be putting in the point caps. This can protect your client if something shifts or they don't have an agent, or excuse me, a lender who doesn't lock. This is stuff that you're going to want to verify with the broker of record what they're requiring. But I'm watching more and more trainings circling back to, hey, this is not supposed to be left blank. We got to get this dealt with, especially who knows what's going to happen over the next 6, 12, 18 months, 24 months with what's going on. So now it's up to points is one of the ones that's been added. So this is circling back to what we were talking about before when I said that this would show up. So there now is this document, which you can mark the box, and that's part of what's in that buyer broker agreement saying that they give permission to the agent to ask the seller to pay part of the commission versus the buyer paying the commission, that they now can include this form. And it's a seller payment for buyer broker form. It is not going to change what's already offered on the commission. So if it's 2.5 in the MLS, that's going to stay 2.5. This is just saying that, look, I've already got this agreement with the buyer. I'm asking you to pay the portion I've already agreed with them that you're already advertising. It's kind of a belt and suspenders of going, look, we all know what's going on. You told me in the MLS, I get 2.5. I want you to know I told this buyer I wanted 3. Can I get the 2.5 from you? This is going to be a thing that, again, when we get more details, and it is going to change everything, but it's a mindset that we've got to shift into. And here's what the form looks like. It's very much similar, kind of like to the single party going through. We've entered at this date to compensate. That's when the buyer entered in the first one for this much purchase property. We now have entered in the MLS what you've said. Seller's going to say that you'll give me this much or you'll give me whatever. So maybe you can get them up to 3 if you've negotiated. Maybe it's only going to get 2 because you ended up with a lower price and the buyer's going to pay the difference commission-wise. There's going to be a lot of negotiating regarding this. And it's going to have to be on a case-by-case basis. And each of the brokers are going to have to set whatever specific requirements they want for their brokerage on it. Because nothing's fixed by law and everything is negotiable.
So Sam, we have a question from Jen that I'd like to go over again. So the SPDB form will be required on, sorry, I lost her question here. Went away for a second. Here it is. Will have to be included even if there's commission offered on the MLS. Remember this, the focus of this is they're going to separate the negotiations. The listing agent having all the money and paying it to the compensating, the cooperating broker is going to end. Every side will have to negotiate for themselves. So Sam, feel free to add something more to that, but we also didn't cover when a seller is going to say 0. Because they could very easily say, we think 2.5 is sufficient.
Yep.
That you're already from somebody else.
So this will only be required if this box right here is marked when you go under contract. So this is going to have to base off of what negotiation the agent already did with the buyer and what amount they agreed to, what the sales price they agreed to, and then coming back saying, hey, we're going to give you maybe, let's say, $50,000 more, but I want a commission and you're going to pay my commission.
So the actual charge that the National Association of Realtors is defending is that we were practicing price fixing by agreeing among ourselves that it was always going to be 3 and 3 or 2 and 2, or the agent will always pay the buyer's agent. We were charged with, and this is the settlement piece of, buyers think they could have got the property cheaper if they didn't have to pay 2 agents. Or they could have negotiated on their own for what that commission would have been. That is the meat and potatoes of the end of the cooperating broker compensation. It also answers to another charge we got, which was being a monopoly, meaning but unless you are in this cooperating broker compensation, there's no other way to pay you. So there will still be licensing obligations, but we're about to see a lot of new ways to pay buyers agents. And I'm also fearing a rush to deal with the listing agent directly, as we've already seen in the market, in the last few years. that may be very exciting for some listing agents, but to be honest with you, it's just whose pocket are we picking next? You know, so even if there's a flux toward the listing agents, eventually there's going to be something. They're trying to cut commissions. In general, they're trying to make us a secretarial service, basically, as opposed to the experts we are in our field with our forms, with our problem solving and all that sort of stuff. So if you have not had time to read on the DOJ versus NAR stuff on Google, you should do that. And then just before COVID, Indeed, one of the magazines that's out every month, they voice.
Inman?
Inman, yes, thank you. They actually were posting the transcripts of the daily trials and one of the daily testimonies, and one of them was the Keller Williams, the leader of Keller Williams, and they were grilling him on why he teaches agents not to show anything that's not 2.5%, or I mean that is steering. So we got hit with some big things. Monopoly, price fixing, fair housing is just, you know, we're going to see a ton more of that as well. In fact, there's going to be continuing education, and I've already taken myself. In fact, Sam, you should take it because it's very interesting. So they walk you through a scenario where there's different races that may cause you a bias, and then they give you sample answers. So there's about 30 questions. Twice they told me that I had made the wrong decision and that I was actually doing a bias. So you have to circle back and complete. So our industry is being cleaned up. It's going to be cleaned up that's why we got the coming soon law. That's why we, you know, all these sort of things. Our ethics, our bias, our pay, everything went back on the table. This is a significant case.
Okay, there was a question that came across that said, so if the buyer is not paying commission and the commission is stated as 2.5% on the MLS and the agent is taking the 2.5%, does this box need to be checked?
Yes. If for the buyer side, yes. Currently, from my understanding, yes. That is how they're going to get paid, because otherwise that's all good. What's in the MLS is also going to change. That's the thing, is all of this that we're talking about right now, the way we do it right now, is going to be completely different. So we got to be ready for a total mind shift of, well, it's in the MLS, so that means you owe it to me. Well, that's also changing, because that's part of that whole monopoly stuff that Mary Jane's talking about. I don't have all the details yet, but I know that from what I've been watching, and she and I have been talking about this for a while, we knew this was coming down the pipe. Some of it got delayed because of COVID. Some of it got delayed just whatever. And now with the market shifting and everything else, this is going to be a big hit for a lot of agents.
That's why I said that if they weren't already familiar with having this difficult conversation by using a buyer broker agreement, they are now. They're going to need to have those conversations. And the fearful ones will we tell you this even in your TC companies. You know, you get paid what you're worth. I mean, you get paid what you're willing to say. If you can't say anything above $250 or, you know, whatever your number is, you're stating your worth. So it's going to be a very interesting ride for buyers, agents. And the piece that we have nothing on yet is how, like, VA buyers would finance the fees and things that are going to go into lending. So I'm presuming part of the settlement is going to include some rule changes on what's going to be allowed to be on a closing CD, and where that money's coming from. So
this obviously will be we'll have to do a whole full class about all of this as soon as we have more answers and more definitive.
But I recommend that you jump on and read yourself current. And I don't mean what the solutions are, because we're still hearing about them. We're just
what's going on even now.
All the talking we've been doing for 2 years about this massive change coming to our industry is about to happen. They're predicting now about March that the settlement will occur. So so read up and at least get yourself current on how this happened. There are 2 lawsuits that the Department of Justice filed actual criminal charges against the National Association of Realtors. And then there's a class action suit that you might have heard is being run by the same people who went after big tobacco. And they are trying to get closed deals, some of that money back. So I don't know how far they'll get with the class action or what the payment would be, because you know what happens in class action, everybody gets $100. But both of these entities are coming at us for these changes. Thank you, Sam. Sorry to interrupt.
Oh, no. That's why I wanted to jump in. So this is, again, what the form looks like. Okay, so then we have the other issue that's been happening. So if units are occupied by a person other than the seller, you need to use the TOPA. So the tenant occupied property addendum, if a tenant is in there for 5 minutes after escrow is closed, you still need this form. Doesn't matter if they're going to vacate before close, doesn't matter anything else, because what's in here after what's happened with COVID and everything else specifies that, say the tenant doesn't get out. Say you have a tenant that won't vacate, that TOP form, which we've all seen, I didn't include in this because I figured there was familiarity, that states that the buyer then can get reimbursed reasonable. Now, reasonable is not quantifiable. Reasonable is subjective, but a reasonable amount for the cost incurred for the appraisal, the inspection, yada, yada. So this form needs to be included. If there's ever anybody occupying the main unit, the buyer is going to be in for 2 seconds while we're in escrow. If we get an executed contract and there's still that body has rights to that space, you got to have a TOPA on there. So this is stating that basically everybody agrees that either it should be included if the buyer's agent hasn't asked the question, then the seller is going to circle back and then we will include it. So if for some reason the buyer's agent's not aware, it still has to be included and still will be part of this transaction at one point or another. Only if there are tenants in the property. Okay, the home warranty. Now this one I've been running into a lot with, Mary Jane, and I'm not sure how to get the word out to all the escrow companies. When this changed in December of 2021, this became just basically a seller credit. Seller side gives a credit. We'll pay for the home warranty, but it's on the buyer side to order it. It's on the buyer side to select the services. It's all on the buyer side. And with that, it's also a lot of concern. I still get emails constantly. Well, there's an overage. That's actually addressed in the contract. That is addressed in RPA 10. It's like 10A right now. It's now going to be 10C. So this is re-clarifying that the buyer's to select. Seller's only paying. They're not ordering it. And any overage, or if it costs them to investigate, maybe they want to find out, have an extra inspection and see if they can get a warranty on something, be it, I don't know, not solar specifically yet, but the roof or anything like that, that's buyer cost. So, and also it does not limit. So if the buyer decides, even if they waive it here, and then last minute decides to order it at their cost, they can do that up until recording. They can also decide what coverage is in there. The only thing that really that it's not, the buyer can't change is the amount the seller is agreeing to credit them towards a home warranty. Otherwise, buyer can do whatever they want. So the deposit. I know we've all seen this before, especially when the market was a little bit more intense, that the money goes hard, or we're making this non-refundable, or we're releasing the deposit. This goes through and specifically addresses that verbiage is the act of practicing law. And by doing that, you are making promises that have come up over and over again that this seller now gets to keep this money and that the buyer can't get it back. Well, we're not lawyers. We don't get to decide that. So this goes through saying that, one, before you do that, you've got to talk to an RE attorney, that somebody's looked this over about what complies with civil code requirements, and that we have to make meet the verbiage that is used needs to meet statutory liquidated damages requirements per civil code. And it has to address the possible liability remedies. What if the buyer never even puts in a deposit? This is a contractual agreement to release it, but there's no deposit. Well, is there any repercussions? What's going to be dealt with? Because the listing agent is not doing their fiduciary duty by not protecting the client. So this is go ahead.
I'm sorry, Sam. Last year when we started teaching this, Cara was very specific. Agents should stop saying there is anything like a non-refundable deposit. There is no such thing as a non-refundable deposit. Even after it's been passed through, it could be litigated and passed right back. So they have warned us that you are practicing law. If you, now, what I've been teaching is, are we smart enough to know if we did our paperwork A, B, C, D, and we've got everything ready and we are ready to litigate? That you still have to be smart. This isn't a blanket get out of jail free card. You still have to do your paperwork. You still have to know which day you canceled and whether it was the right day and all the other things that go with it. But there is no such thing as a non-refundable deposit.
Well, and it also circles back to, as we're seeing over and over again, it's false promises. It's the thing the agents are speaking and saying untruths, like what we're seeing from the DOJ coming back saying that, you know, that they're free, that the deposit's not refundable. We can't make these broad generalities. And so they're trying to make sure the verbiage is there, that it's obtainable and it's in the contract, reiterating, even if somebody misspeaks on their, you know, talking about this, you were told in writing, this is not a thing. So this definitely, you're going to want to check with the broker of record on any file that you're working on. And if you see that verbiage, I would definitely pop it past the file checker in the early portion of the transaction. I would definitely flag your office manager, broker, whoever does the reviews, and just go, hey, do we want to double check this? Or is there any verbiage that's missing? Or what is the official legal stance from the brokerage on this moving forward? So you have, because it's proof of, like, what have you done in every single form, or excuse me, every single file? What has been your over and all service? What has been the standard of service, your standard of care? So if you miss it on one, to be able to say this is what the brokerage requires, it's something to have for in case this goes to litigation.
Don't be surprised if you have to educate them on the problem as well as the solution.
And don't be surprised if you get told, well, we've done it this way for 20 years. Why is it now a problem? Well, because things are changing and this is now a problem. Because people have gotten to jail. Okay, so this kind of circles back to that whole thing with the TOPA. On top of, if there's a multi-unit property and the buyer's saying they're buying one to move into, they're going to say live in the front unit and have tenants in the back, they have to specifically identify in writing, so an addendum to the property or to the contract, we will occupy unit A. This has, I guess, been an issue of loan fraud type things where people are getting owner-occupied type rates, but they were never occupying the property. These were investment properties and things were getting slid through. So we have to disclose any units occupied by persons or tenants other than the seller. Again, circling back to that same problem. And that new buyer, if they are going to owner occupy, must identify exactly which unit, and that unit has to be delivered vacant or clarified on the TOPA for your 60-day notice, whatever you need to vacate the property, and make sure everybody's aware and everything's clarified in writing. This one's really exciting. And now the window coverings now include hardware and the rods. Those get to stay. And that pool heater actually gets to stay too. So when somebody says that they want the window coverings, that means you got to leave the rod and the hooks. You can't just leave the curtains on the floor. And now the pool heater, if they said there's a pool heater, the heater itself does need to stay put. Those were the two big additions.
That last line there, Sam, at the very bottom of the page, in bold, where it says, if currently existing at the time of acceptance. This was a major change last year, if you guys remember from our many RPA classes. I've had to explain this a lot to sellers, that if you forget to tell me that you're taking the Ring doorbell and the Nest and those sort of things, they must remain with the property. Now, if you get to court, we will still have the fixture rules and things like that. But the way we simplified it for realtors last year was, if it was there when it was at acceptance and you didn't exclude it or include it, it needs to be present at the close of escrow. This is very important for sellers to be very certain that, you know, it used to be big stuff like grandma's chandelier or, you know, a favorite mirror or something. And now it's the Ring doorbells, the Nests, the electronic services, the alarms, curtains. I personally had 3 curtain arguments last year, and they were always about somebody taking a portion of the curtain. So if they want something, they either have to exclude it or take it down.
Exactly. Okay. There we go. I got too many things going here. There we go. So the seller has to give the buyer all known information about the solar. That's if they know they've got a lease, if they've got a contract, even if they've already bought it and there was a contract, who do they pay every month? How do they get it? What are their bills? All of that. This is just the way it is. It's now part of it. Solar is now finally being called out.
Not only do you collect your contract from your seller in pre-escrow, but I share it with your TC, so she has it ready to go as well. So
Yep.
the TCs who work close with me know that I land things on their desk that they would normally have to hunt for.
So this form is going to be, it's got two sections. So the first section is all the advisories. So you're going to want to, some brokers may, the way you're seeing the FHDS being required by different brokerages right now, even though it doesn't apply, they're just doing a blanket statement. We may see this happen with this form as well because of it having the advisory portion. So you can always negate, not do the questionnaire, but whenever you have the verbiage advisory, that's just giving information about potential. So first they're going to disclose the different types of solar panels and systems, the different types of ownerships and leases, then how payments work. So if the advertising material, so if the MLS says we've got this kind of solar and this is amazing and blah, 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 that doesn't mean it's really happening. It's got to be whatever is actually tangible on there. That's not contractual. They need to have all the real documentation from the solar company. You cannot rely on the MLS. You cannot rely on any marketing things. The agent may have said, oh, it's owned and not have a clue. The agent may say it's this type of solar panel, not have a clue. We need the tangible documents related directly to that specific solar panel unit. I had one where my agent said, it's on solar. The water heater was on a little solar thing and that was it. Not the whole unit. And that's become an issue. So it's again, we're going to need to educate some of the newer agents and talk to the brokers where this is going to be something that's going to be kind of a flag where people are trying to keep things moving and shine all the properties in the most positive light. We just need to remember to watch our verbiage. Paragraph 4 will explain what gets transferred with the sale. Paragraph 5 of this part will importance of reviewing all the documents and that you need to have the system inspected. I am seeing more and more individuals have solar inspections in addition to their physical inspections. I think we are going to see the solar inspection the way we see a pest inspection more and more in the future. And this is the part that will be just the questionnaire. It's very similar to what we've done already with the seller, the SPQ. So you're going to want to go through, it's just, you know, what's the approximate age? Who did it? What's going on? Is it on grid, off grid? Do you know? Is there a balance due? You know, this is, if it's conveying, do you own it? Is it leased? When did it start? When does it expire? All the things, all the questions we're already asking, this actually puts it in a form. So again, when you're doing your listing packages and everything else and verify everything with the broker of record who you're working with and how they want to process this, I would highly encourage, as soon as, if you see on the RLA, it says solar, this should be one of your disclosures that you have them complete. We'll see what everybody decides, how it goes through the different file checking systems and everything else, but I think we're going to see this is going to help answer a lot of questions. And the sooner this can get reviewed, the better. Okay, so RPA 23. Guess what? If we have somebody assigned or nominated for the contract, we're supposed to tell escrow. And we all know that if you're assigning the contract, we do the AOAA. If it's to the trust, they don't have to sign that. If it's into somebody else, if any other party is now signing, we have to do the whole breakdown of the AOAA. Well, escrow wasn't being told till like last minute. And escrow needs to be notified of this. That's why we have that shortened time frame to 17 days, so we don't have the last minute, now we have to redo the entire file. Because as much as it makes us crazy with our contracts and disclosures, escrow has to scramble just as hard. So the sooner we know, we need to make sure we're sharing that right away. And we need to, any nomination is treated exactly the same as an assignment. So if they're even considering it, we still should be doing this. If they're looking into subject to, we still should be doing this. Okay, I've had this question come up many, many times about what's a legal holiday. Because is it federal? Is it state? Is it county? Which one? What does it apply to? So technically, it's meaning any holiday or optional bank holiday under Civil Code and Government Code. All right. So then we're dealing with, is Columbus or Indigenous Persons Day, Columbus Day, does that count? Does this not count? So is anything that you double check under the Civil Code and the Government Code applying to the area you're in? Well, when do we close? What do we do about closing? That's gone specific to the recorder's office in the county where the property is located is closed, or any day that the lender or escrow company, because certain escrow companies take holidays that other people don't. Then the county recorder can be closed, or excuse me, open, and some escrow companies may have taken that day off if they have a personal. I've seen team building days when the escrow's closed. I've seen other things happen. If escrow's closed, we're not closing that day. So it's now calling all three of them out. That all three, if any one of the three, your county recorder, your lender, or your escrow company, then COE will be the next business day.
Yeah, we've seen it where, for instance, there are some holidays where the San Diego recorder's office is closed, but Riverside, San Bernardino, LA are open. Orange County are open, right? And there's a escrow company, single private escrow company that is located in San Diego. And because their recorder office down there is closed, they take it as a holiday, right? So this would play a part. It's not across the board by county that every holiday the counties are all closed on the same schedule. Each county has a different holiday schedule based on their area. So keep that in mind.
Well, like San Diego, we do Cesar Chavez Day, and then there was one in San Bernardino takes like the Monday after Christmas always offered. There, as you said, you can pull up the schedule. You can get the California County Recorder schedule and be able to compare. Just double check if you're working on a county outside of your typical area, and remind your agents multiple times. People, the fact that Friday is a holiday. I don't know how many people are remembering that Friday banks are going to be closed. Some banks will be closed. County recorders might be closed. You need to double check. And our favorite, last but certainly not least, and the biggest nightmare to all parties involved. This has been the biggest issue, and this was their solution. I think it's still going to be a huge problem. So, as we all know, page 16 of the contract, where the agent's information is supposed to go in. When the contract was changed in December, it became electronic delivery. So as soon as you hit send on that email, that's considered delivered. But you need an email address to actually get that information from. And if you don't have an email address here, we're missing a piece of the puzzle. How do we prove we sent it to the right email address to prove that receipt for starting the time frames and for starting the time, everything else? The agents are not understanding that they have to manually input this every single time. It is not currently defaulting to this because there is concern about what if you're at a different email address, what if you're traveling and you have somebody else filling in for you at that time, who's going to be answering, all the above. So we do have the DEDA, and that's become an addendum now instead of an amendment, or it's reversed them. So for you can, after the fact, if you have to go back in to say your designated electronic delivery address, addendum can be used to clarify this. It needs to be used. It's not even a can. This needs to be one of those things like when we're used to be missing the initials for acknowledgement of receipt. The DEDAs need to be going out right away because then it affects delivery and time frames. Because was it delivered to the correct place? Can I prove it was delivered to the correct place? How can I say my time frame start if I didn't do this? We have nothing in writing to back it up. We have a lot of handshake and, oh, it's okay agreements. It's not. So this needs to be addressed. And if you get a contract that comes over, it's got to get cleaned up as quickly as possible.
Hey, Sam, I have a question for you.
Shoot.
I'm getting agents who don't want to put in a text number because they don't want to be notified that way. Period. They're leaving it completely blank because they do not want to be notified that way. So
I'm not aware they have to be. As long as they've got one of the two. It's electronic. It says electronic delivery, and email is an electronic delivery system. We'll need to clarify. It's kind of like if you go back, Civil Code says booklets. So I fight and don't do the links because it says booklets. Well, this says electronic.
I'd be tempted to put, hit the space bar and turn the thing green like we do when we need to type something that somewhere it doesn't normally belong and say no texting of delivery.
I would definitely, if they don't want to be, I would do it as clarification.
Yeah, leaving it blank, it may cause an impression that you missed it.
Correct.
That a standard and normal way of delivering messages, especially when there's multiple offers and you're about to have your counter offer withdrawn with a woo form. The first thing the woo form says is that I have notified them by phone that we have gotten another offer orally, is what it says. and that we are now moving to a new counter for you potentially. So I'm having people not wanting to put a phone number in, which also handicaps escrow because we can't call you. Fix anything either. But
Sam, I heard that the whole reason I brought this up is you're having more and more teams out there and more agents that are part of teams, and the teams doing majority of the volume. And a lot of the teams will track the team lead as every contract, right? Everything's tracked through the team lead. However, there's a buyer's agent that is also representing, that's handling that entire transaction. And that's where this box is underneath that first one. It's where you check it. It says more than one agent from the same firm represents buyer, additional agent acknowledgement attached. Because a lot of times, the team lead is the only thing that shows up in that contract. And then somebody says, oh, I reached out. And they're like, I never heard from them, right?
Well, the problem is with the AAA, which is it lists all the names of who's involved. There's no place to put an email address for each one of those individuals. And that may be something that'll evolve. So that's, again, why it needs to be actually typed in. What email address do you want to be responded? Where does this need to go? I understand what you're saying about the name and who's the team lead, but do they have like contracts for the group? Do they have whatever? Because whatever's on here is where they're telling us to send it.
Correct.
So there's
if they didn't have this, all they had was what is on the contract, right?
Yeah.
And somebody goes by that, and it's not really who they should be going to get the answer fast enough.
Which is, unfortunately, that's right. It needs to be completed correctly by both sides of both parties.
So we're getting questions on the chat as to whether the DEDA is optional and not required. It's the exact same form, similar to when we clear up agency.
Correct.
We go to the AC form and we clean up the agency. We make sure it's right top to bottom. And so they're getting pushback that the delivery is not necessary or is not required.
Okay, so we got two different things here. Required? No, it's not required because this should be filled out properly. If this is not filled out properly, required? No, it's still not required. However, we also cannot proceed, the contract's then not executed. I mean, technically, you cannot comply with the contractual agreement to deliver items electronically if we do not have the information. Again, is it required? Well, no, that's not saying you have to do this. However, we have another problem that has to be addressed. How is the communication going to be fixed? Okay, well then we need that form, because once the meeting of the minds happen, then yes, that form is there to facilitate. It's kind of like the AVID. The AVID itself, that form, not required. The action of the agent to visually inspect the property, civil code required. The form was created as a tool to show proof of how to do it. So we got to get out of that mindset. Well, it's required, or my broker wants, or no. Let's slow down. Let's read our contract. What is contractually agreed upon? What is civil code required? And what we need to do to clean up a mess so we all can be on the same page and not go to jail? There's a difference. And then down below here, it's now letting the seller's agent, if you notice, come on, sorry. Go back. But if you go back on the bottom, because of course my toys aren't working down here, it's so that it says that the seller's agent can actually fill that out. I give up. It's going to be cranky. So you can go ahead then and apply to be filled out by the seller's agent. There we go. Check all that apply. Designated all the things. So the seller's agent needs to fill that out. The other one needs to fill that out. If you guys are not filling this out, then I honestly would send my counter offers back with a DEDA. I know this is all more work. I understand it sucks. Totally get it. But it's easier to do it early and deal with it when we're all happy we got into escrow and clean it up quick than when we go through and then we have a fight over time frames and we're going into potentially losing a deal.
And we were all in the habit as agents of helping the listing agent by putting their information in there. And we recommended last year when we were teaching not to do that. So because they need to reply with where they really want it. Where they want it to go, which leads me personally to be uncomfortable about fixing things above signatures. So I would for sure go to the DEDA in my reply to avoid fixing something above a signature. So I didn't see even last year how they were going to get out of not using that form.
They're not.
Because there's no, unless the listing agent has told you that's his delivery stuff and given it to you, you're gonna have to leave that blank when you're writing an offer. There's no, you need, if you were in the habit of filling it out for the listing agent, stop it.
Well, and if I get something sent back where it's like, we've added the email address, everybody initialed it, I'm like, nope, I need a DEDA. I'm not, no. And this is, look, we've already talked about, they're looking at all the commissions and changing how that's happening. They're wanting to change how the disclosing about things being misspoken. We really shouldn't be going back and adding things when we have an addendum, an amendment, a correct form that were created by people in legal that create protections. That's why the car forms agreement exists, is so you get the protection of these forms. But you also have to make sure you're using the most current version and you verify all with the broker of record. But those are the things you need to be thinking about. These quick little fixes we've done before, people are not as forgiving as they were previously with the changes in the universe. So we need to be savvy and just get it done right from the start.
And there shouldn't be anybody on there that that doesn't have agency. And your TC should not be in the alternate email either.
No.
Don't have agency either.
I would, well, and just clutch my pearls over the liability. No, thank you. Okay, so this is me, but everybody pretty much knows they get a hold of me or part of the Facebook group. I'm at One Stop TC on almost every channel on the planet, and I'll happily talk about this stuff till I'm blue in the face. The TCs I've known for years and years. You just pick up the phone, call me. I answer questions. Facebook Messenger pretty much anytime. I'm a big dork. I really do love this stuff. I'll talk about it anytime. Figure I'll stop screen sharing and we can go through all the questions in the chat or just open it up. So let me stop this. Okay.
Well done, Sam. Thank you so much.
You're welcome.
Very well done. And I know all the news you got about the Department of Justice settlement is confusing. It is. Yeah, that's where we are right now. We are in a confusing space. Next week, Tommy is scheduled to give us a talk on using crypto for a home purchase, which happens all the time now, and how safely it's done, and who converts it, and who takes the risk, and all that sort of stuff.
Well, let me hit on that real quick.
I was just gonna say, I'm only going to him if I can get the speaker to come talk about the Department of Justice.
Yep. We may move it, but it's coming sooner than not.
Yes.
Crypto's not going away. It's a bigger business than the New York Stock Exchange currently. So don't be scared of it. As an agent, especially on the buy side, you should be asking, especially when you're looking at, well, are you coming in with a down payment? Yes, I am. No, I'm not. Where are you getting your funds? Just like you asked, do you have a 401k to try and qualify somebody? You should be asking them if they hold crypto as well at this point. I will start from scratch. So if you know zero about crypto, you will leave the meeting knowing what you need to know to move forward with your clients. And I will explain the process because it's not a person to person. So it's not the buyer and seller exchanging crypto from one to the other. By the time that crypto hits escrow, it is in dollars. And the transaction is done the same way. There's just an extra step in there for the buyer. And I will walk you guys through that. Currently, as far as I know, I am the only title company currently accepting crypto transactions. So I'm excited to give that class, but don't be scared of it. You'll learn a lot.
Talk about where we post our classes, our recordings.
All the recordings are posted on YouTube. If you go to YouTube and search my name, Tommy Dutcher, you will find it. I think we currently have about 70 different Zoom Learn trainings there. So you can find something on almost every single topic. We try and take feedback from you guys to pick what those topics are going to be, or if it's a lot of questions coming in on particular topics, that's how we kind of pick which ones we're going to hold. So please go there. Please subscribe. That way you'll get updates when we put a new video there. But all those videos are shareable, so you could go back and watch them at your convenience.
All right. We always stay on until you guys have all logged off in case you want us to talk to us about a particular situation or ask a question about the class. So we just stay on and chat. Feel free to stay with us if you want to talk more about.
Yeah. But thank you everybody for joining us this week.